Similar. So far, we have done all the journals. We have done the cash receipts journal. We have done the cash payments journal and the debtors journal, debtors allowances, creditors journal, creditors allowances, and the petty cash journal. Now we're gonna have a seventh, well, it's the seventh journal. In this journal, we record any transaction that cannot go to the other six journals. In the CRJ, we know that we record money that was received. In the CPJ, we record money we paid. In the debtors journal, we record credit sales when we sell on credit. In the debtors allowances journal, we record allowances and when debtors return goods to us. In the creditors allowances journal, well, creditors journal, we record credit purchases when we buy on credit from creditors. And in the creditors allowances journal, we record credit returns when we as the business return goods to creditors or claim allowances from creditors. In the petty cash journal, we record small payments, small amounts of payments, and anything that does not relate to what I've said thus far, we are not going to record it in the other six journals. We are simply going to record it in the general journal. Now, let me just get into it. It is a subsidiary journal. It is a book of first entry. As I've said, some transactions do not occur frequently and so do not justify a special journal. A general journal caters for such transaction. The entry in the general journal shows the account debited and the account credited, as well as a narration, which is a brief description of the transaction. The journal is adapted to cater for transactions with debtors and creditors. You will see that as we go through examples. Well, because we adapted it to cater for transactions with debtors and creditors, we're going to have separate columns for debtors control as well as creditors control. Posting to the general journal, just like any other journal, is done on a daily basis. And once we are done posting the totals, in this case, some transactions, we are going to post them to the respective ledger, general ledger accounts, but the totals of your debtors control and your creditors control will be posted to the general ledger at the end of the month, at the end of every month. Now, a general journal will look like this. So you'll have VJ is the source document. You'll have a column for day. You'll have column for details. Under details, you record account debited as well as account credited. And then you'll have a folio, which is the general ledger number of the account debited or credited. Then we have debit as well as credit. That's where we put the amount debited and the amount credited. And if the transaction affects debtors control, we will record it under debtors control. If it increases debtors control, meaning that debtors will owe us more because of that transaction, we will record it on the debit side. If it decreases debtors control, we'll record it on the credit side. Similarly, if it increases creditors control, we will record it on the credit side. If it decreases creditors control, we will record it on the debit side. Remember that creditors control is a liability and liabilities increase on the credit side. Now, I will start with the first example of transactions that should be recorded in the general journal, and that will be bad debts. Now, you might be asking yourself, what is bad debt? Now, the major risk of granting credit is that your debtors may not pay you back. Now, if your debtors take time to pay you, you will charge them interest. If they still don't pay you, you will send them regular reminders to remind them to pay you. By regular reminders, I mean sending them letters, sending them emails, sending them SMSs, calling them, Did I mention emails? And I've realized now they even send you as a data a WhatsApp message, just trying to remind you and to tell you that you need to pay your money back. They will basically mail you all reminders. Okay, they will mail you all reminders. Now, once the dealer has done everything in their power to get what is owed to them, and they still don't succeed, then we have to write the data off. And before we write them off, we'll hand them over to our lawyers. And if our lawyers still fail and we fail to get our money back, we will write them uh, off as bad debts, because it is pointless to keep them in our books after we've done everything to recover the money that is owed to us. The data may have moved, like for instance, my whole family is from Lesotho. So if I can buy a Mercedes Benz here on credit, and when I realize that I can't pay back, and just relocate and go to Lesotho. See? Now, how will Mercedes Benz get their money back? Because I've skipped the country. The laws of Lesotho differ from the laws of South Africa. So that's what people could do. And that's why it's very, very difficult as a person that is not a citizen of South Africa to get anything on credit. And that's why we struggle in most cases as businesses. They struggle a lot because people run away without paying back their debts. Okay. I can imagine an American person coming here and buying everything on credit and then skip the country and go back to America. Hmm? It's a huge loss for South African businesses. Okay. And note that if you have done everything in your power to get your money back and the debtor is still not paying you back, it's pointless for us to keep them in our books as assets. And guys, ironically, is that businesses would actually keep that person in their books, even though they have done everything in their power to get their money back from that person. They will still keep them in their books because businesses want their assets high, and when you have a data, it increases the assets of the business, and it makes the balance sheet or statement of financial position of the business look good. So it reflect high um, economic resources than the economic resources that can be derived by the business, because this economic resource, which is your data, you will never get it back. You will never get it back. And the principle that we apply, we call it the GAP principle. It's a prudence principle. Rather, the reason why we have to write them off, even though later on they can come back and pay us, but we have to use the prudence principle. Assume the worst and the best. Okay, so you prepare for the worst and hope to get good news. All right. And since I said this amount won't be recoverable, we must write it off as bad debts by means of a journal entry, which will be made in the general journal. The owner has to authorize this by completing a journal voucher. The voucher becomes the source document that we use to record the transaction in the general journal. A debtor may be declared insolvent. When you're declared insolvent, it's when your liabilities are more than your assets, so you won't be able to pay back what you owe. And in that scenario, when you're declared insolvent, they will appoint a lawyer, and the lawyer will, which is what we normally call an estate, will take all your assets. Okay, ask Dr. Malinga. I think Somizi as well. Who else in South Africa? I think Zahara as well. May her soul rest in peace. I'm trying to think of other people that were owing. And I don't know about Katla Mpela, who was playing for Sundowns. And it applies to a lot of artists, including soccer players. See, guys, doing accounting is very, very important. Whether you want to do music or whatever, it's very important to know how to manage your finances. You need to know what an asset is. You need to know what a liability is so that you can spend your money wisely. And these are the people that you watch on TV. They have, what do they call them? The grills, those ugly tips that they put on. And they'll tell you that you dissing them because you can't afford, but then at the end they end up being broke, which is weird. You know, when they float their money there and they're showing off and they remind you of how poor you are, and then they get broke. And now they'll talk bad about the entertainment industry, they'll talk bad about other people, and but they forgot what they were doing. And I think it's not just everyone needs to, because I have CA friends when they became chartered accountants, started buying expensive cars, and these are the people that know how to run finances. They'll be responsible for big corporations' finances, but they right at the beginning they're making wrong financial decisions. So you need to manage your finances well. So they will basically sell all your assets. And once they've sold all your assets, whatever they recoup from selling your assets, they will pay all your creditors, right? And let's say they only managed to recoup 5,000 Rand out of what? Out of a debt that you, let's say your total debt was around 20,000 Rand, but they only sold your assets and they got 5,000 Rand back. But you have five creditors. So what they will normally do is that each creditor will get a certain percentage. Okay, let's say you have four creditors. So each creditor, let's say you have five creditors. So each creditor will get 20% of what you owe them. So they won't say 1,000 to you, 1,000 to you, 1,000. No, they won't say that. They'll only say whatever this person owes you, we're going to give you 20% of that, to make sure that the guy that is owed more is not robbed as well. So it's shared equally amongst the people that you owe. But the thing is, you still owe those people more than 15,000. So that 15,000, each of those creditors is 80% of what you owe to them. So that 80% that you owe to them, they need to write it off as bad debts because they will never get it back from you. I mean, you don't have any assets. So including your bank, it's zero. There's nothing there. So you won't be able to pay them back. So it's pointless for them to keep you in their books. All right. Let me just give you one example here. We have KJack who owes 2,000, has been declared insolvent. His estate, so I just gave you an example there of what an estate is. His estate paid a dividend of 35 cents in the rand. The balance of his account must be written off as bad. This person was owing us 2,000 rand. So the estate went out, took this person's assets, sold them, and now they decided to say all the creators will get 35 cents, 35 cents, 35 cents, 35 cents. I think it also happens to businesses. One such business will be Tongat. Is it Tongat or Tonghat? I'm not sure, which is a company that produces sugar. The famous brand will be Hewlett's. I think it was built out by Robert Gumede, who gave it around 8 billion. And that's what a bailout is. And I think Robert Gumede of that 8 billion, a certain percentage will be converted to equity. And a certain percentage, equity means that Robert Gumede will own a portion of Tongat. And the other one, it's a liability, meaning that Tongat still needs to pay Robert Gumede plus interest. And the one that is converted into equity, Robert Gumede will only expect to get a dividends from that. But I don't think the shares are going up. And there are a lot of businesses that are going through serious financial strains. I don't know what's happening with Sasso, and I can't even ask my friend um, because they'll tell you about confidentiality and stuff. I know that he's heading one of the finance departments there. But from what I read in the news, it's not doing that well. And it has to do clearly with energy crisis that we're facing as the country. I'm just giving you real examples that you can actually apply in real life. It's not just individuals that can pay back other people. Even big corporations can pay back people. One of those, as I told you, is Tonga. The other one is Steinhoff. Steinhoff. I hope you watched the series. It's a documentary about how Steinhoff went down. And all of these companies are going down because of directors' negligence, corporate governance, people not being loyal and being honest in their dealings, um, company dealings with other businesses. And then when the corporation goes down, we have to worry about them getting unemployed. But they don't think about these things when they hire wrong people, when they hire family members, when they don't do their job properly. They don't think about the fact that this in the long term can impact on this big corporation, and nothing is too big to fail. Okay. Well, there are companies like US banks that were too big to fail. And they can go down if they're not managed properly. And if you steal company money, instead of paying creditors, you steal money and you don't use the money efficiently, it will lead to the company collapsing, which is supposed to serve a lot of generations. I remember in Babelegi, there were a lot of firms there that were creating Amons Crowd, that were creating jobs, but people that were working in those companies were not doing proper jobs, you know. They were not doing proper jobs. Some will arrive late. You know, it's little things that will impact on the company's longevity and result in it going down and not being able to pay their creditors and so on. All right. Anyway, here we have K Jack who owes 2,000 Rand, but we only received 35 cents. So how do we calculate this? Please note that when you take 2,000 Rand, so for every 1 Rand that K Jack was owing us, we got 35 cents. How do we get that? So we'll take 2,000 Rand and times it by 0.3. So how do I get that 0.3? You just take any amount that is shown in cents. You just put the percentage is the same as though you got only 35%. Okay. And 35% is the same as 35 divided by 100. So even if it's 120%, you will still take, 120 cents, you will still take 120 divided by 100 to convert it into a Rand value percentage. Now, note that that's 700 Rand that we, so for every 1 Rand, they paid us 35 cents. So for 2 Rands, they will pay us 70 cents. Okay, meaning that for 2,000 Rand, they'll pay us 700 cents. Well, seven isn't 700,000, 700 cents here. It's 700 Rand. All right. And that's how much we'll receive based on the cents that we got. So when you add those 35 cents per 1 Rand, and there's 2,000 of them in total, you will get 700 Rand. That 700 Rand that we receive is money we receive. It will be recorded in the cash receipts journal since it has been received. The other, note that this person was owing us 100% of the debt, which is the 2,000 Rand. So we only get 35 cents of that 2,000 Rand. So we will not get the other 65 cents. How do I get the 65 cents? It's just 1 minus 0, 0.35. It'll give you 0, 0.65. Take that 0, 0.65 times it by 2,000. It'll give you 1,300. That 1,300, we need to write it off as bad debts in the general journal. And bad debts, you don't know what it is. I'm going to tell you what it is. It is an expense. We are recognizing an expense. You know this from grade when we started in grade 9. An expense increase when it goes up, because we are recognizing it, it means it is going up. When it goes up on the debit side. Since it is a loss that has been incurred, anything that reduces owner's equity goes up on the debit side, and bad debts will reduce your owner's equity. And then we credit the person that is owing us, which is the debtor, and then we credit what we call debtors control, which is the control account, which records everything that was owed to us. We are going to reduce it as well because we'll be owed less. We will be owed 1,300 less. Okay. Let us look at a proper example. So on the 10th of May 2022, T-Tower's balance in the debtors ledger of Aristos was 560. This account is overdue. So overdue means it's long overdue, means that we send reminders, we call the T-Tabo, Tibo Touch, we called Tibo Touch, but he was somewhere in America and still didn't pay us, didn't respond to our emails, and we did everything we can, and clearly we have to write this person off. So when we write it off, we are going to debit bad debts and credit Tibo Touch, which is by that 560. But because Tibo Touch is also a debtor, we are going to credit debtors control. So debit, so we have, let me just start from the beginning. Under source document, we have a general voucher number 1, day was the 10th. Under details, you put account debited and account credited. The account that you're crediting, please put it slightly to the right of the account debited. So don't put them on the same margin. So the one that you're crediting, put it slightly, write it slightly to the right. Do you see where it is? The margin is not on the same in the same margin as the account debited, okay? And bad debts is an expense, so it'll be under nominal. Never mind that 9. And we debit it by 560. We credit T-table, and under folio is debtors ledger by 560. And we will also credit our debtors control because our debtors control has to decrease by that 560. And then you explain the transaction, and that explanation, we call it a narration. I hope I've just narrated that well for you to understand. This is me just explaining everything that I've done. How will this affect our debtors control? I wrote it there. Debtors control is an asset. It increases on the debit side. It decreases on the credit side. Here it has to decrease because this data we writing them off, all right? So we are going to decrease it by that whole amount that we writing the data off with. We'll write it as general credits. And in brackets are all bad debts there, which comes from the general journal, which is the total of your debtors control, the credit side of it in your general journal. It'll be 560. And we created a new expense, which is bad debts. Because it's an expense, it'll go up on the debit side as an expense because we lost. We will never get this money back. I mean, you took my cell phone that is worth 3,000 rand, and now you are unable to pay back. All right. It's a loss. I will not get that 3,000 back. So I'm losing. You took it, I'm losing. I created debtors control that I'm going to get it back, but I've done everything to get it back, but I'm not. So I have to write it off. And when I write it off, I will write it off as an expense. Remember, when I sold it to you, I debited debtors control and I credited sales. So now I'm crediting debtors control. I'm debiting bad debts because I won't get it back. The bad debts that I debit is to reverse the income that I've earned, which was the sales amount. I hope that makes sense. Okay. I hope I didn't push that at a like higher level. All right. So I'm gonna debit my bad debts with debtors control, which is the contra account. In the general journal, the amount will be 560. Now let's go to T-Table's debtors ledger account. T-Table was owing us 560. And now on the 10th, we won't get it back. We decided to write it off as bad debts. You write general voucher in brackets, bad debts, and this will be in the general journal. So you know that when it comes to the debtors ledger, it goes up on the debit side and it goes down on the credit side. Here it'll go down by 560. At the end, we'll say 560 balance minus 560 credit. At the end, T-Tower will not be owing us anything. Okay, got it? Let's try this one out. So here T-Tower is owing us 3,000. And we said this account is long overdue, so we need to write it off. But we don't write off the whole 3,000 rand because as various stores, we received 30 cents in the rent from the estate of T-Tabo as he was insolvent. Great news. So that 30 cents goes to the CRJ. But the other 70 cents, we need to write it off as bad debts. Okay, I'm just left with 3 minutes to finish this off. So what am I going to do? I'm going to find the 30 cents, which is 900 rand. That 900 rand, because I've received it, I will record it in the cash receipts journal. And the other 70 cents, which will be 2,100, will be recorded in the general journal as bad debts. How do I record it? I will debit bad debts by that 2,100, and I will credit T-Table by that 2,100 and also credit my debtors control and write the narration. In the cash receipts journal, I'll write receipt one. Under details, I'll have T-Table. They didn't say it's a direct deposit or not, so I will put it under analysis of receipts and then put it under bank as 900. But it will also go to debtors control under receipts. It will be 900 because I received it. In the debtors control, I will credit my debtors control by the amount that was received, which was it was 900, and then credit it again with the bad debts amount, which was 2,100. My bad debts will be 2,100, so I will debit it with 2,100. In T-Table's ledger account, the balance that he was owing us was the 3,000 rand, and then we reduced it by the amount that he paid, which is 900 rand. So reductions on the credit. So he ended up owing us 2,100. But that 2,100, we also had to write it off as bad debts, which comes from the general journal. And when we write it off, it reduces what Titawo was owing us to 0. Got that? I hope I wasn't too fast, especially with the second example. I had 3 minutes, sorry. Slow it down when you play it, or just keep on going back just to hear what I had to say. Right. Try this classwork. Oops. Please read on that till the next lesson when we go through this thoroughly. Thank you for watching. Khotso.